Welcome to Better Books with Kathy Houston. This is the Advanced Liability Training section. In this training, we are going to discuss some advanced topics that affect our liability section of your books. Current liabilities are debts that are paid within 1 year. Long-term liabilities are debts that are paid over more than 1 year. I've created a separate training for accounts payable, payroll, and auto loans, but I wanted to discuss some advanced topics in this training that I receive a lot of questions on. What is the difference in an employee and a subcontractor? Here are some questions that you can ask yourself to determine whether the people that are working for you are employees of yours or subcontractors. First, does the person work full-time for you? Does the person work for anyone else? Does the person wear your logo apparel? Does the person drive a company vehicle? Does the person use your equipment, or do they provide their own? The answers to these questions are important in knowing what you as the business owner are required to do and required to file. It will affect your liability, your conformance to the fair labor laws, liability insurance, workers' compensation, and potentially payroll and HR requirements. I have put a link down here at the bottom where you can go and do some research to determine whether the people that are working for you are employees or subcontractors. Once you have determined whether they are an employee or a subcontractor, you need to know what your filing requirements are. In the accounts payable training section, we discuss the importance of the W-9 to get the proper information from a vendor so you know whether you need to file a 1099. For most vendors, if they are an S Corp or a C Corp, you are not required to file a 1099. For other vendors, you are required to file if the total paid to them for the year is $600 or more. Most states only require 1099s if there is state withholding on the 1099, but check with your state. 1099 miscellaneouses are due February 28th. 1099 NECs are due January 31st. W-2s are required for all employees and are due by January 31st. Class tracking. What is class tracking? Class tracking is tracking income and expenses by department, location, separate properties, or even segments. Class tracking is not the same as job costing. Class tracking is at the entity level. Job costing is at the customer level. Class tracking is dividing your business by different divisions. Job costing is dividing your customers by jobs. Look at this example where the Better Books profit and loss is divided by two different locations. The unclassified can be expenses that aren't classed, such as overhead. To start class tracking in your software, you may have to enable it depending on what kind of software that you use. Job costing is tracking your income and expenses for a specific job. Job costing is dividing your customers by individual jobs. This example shows the income and expenses for a specific job. You can have multiple jobs under one customer. You can also create estimates and turn those into jobs and track expected income and expenses to actual income and expenses. Just remember that class tracking is at the entity level, job costing is at the customer level. Sales tax. I see a lot of sales tax mistakes, especially with my online retail clients. I want to try and explain how sales tax works and what should be shown on your books. First of all, know that you are responsible for filing with your state. Your software may calculate the sales tax, but most software requires you to remit it to your state. Don't miss your filing deadline. If you're a monthly filer, your tax is due by the 20th of the following month. So an example, You charge $245 in sales tax for February. It's due to most states by the 20th of March. The third thing is filing incorrect forms and amounts comes from not knowing the rules. Sales tax for each state will be different based on the state's sales tax rules and nexus. Sales tax obligations are determined by where you have economic nexus or physical nexus. Nexus is determined by each state, and I will talk more about this in the next slide. Sales tax is not an expense. It is a flow-through that should not be shown on your income statement and profit and loss. The sales should be entered and the sales tax is posted as sales tax liability and is shown on the balance sheet as a current liability. When the sales tax is paid, the check is coded to the sales tax liability. The sales tax stays on the balance sheet and is increased with each sale and reduced with each payment. If you have sales tax that is showing as an expense on your income statement or profit and loss, you need to recode those payments against income. Credit the expense account and debit income. This means that you have counted the total received as income. Let me show you what I mean. Here's an example of how an invoice is coded in your software. If your accounting software is posting sales tax as a current liability, you just need to make sure you're posting the sales tax payments against the sales tax liability account. Most sales tax coding issues are because the invoice is not created in the accounting software. Let's use this as an example. You have an online platform where you make a sale and the total for that sale is deposited into your bank account. That deposit includes sales tax. This is why I said if you're showing sales tax as an expense, credit the expense account and debit income. It is not an expense account, it's an offset to income. Sales tax nexus. Sales tax nexus is only going to apply to you if you are selling goods to someone else in another state. So nexus determines whether a sale to a seller in another state than yours requires you to register with that state and pay tax to that state. Some states have a certain sales threshold before you have to register and pay sales tax directly to them, while others have a presence test. Most online software companies will calculate the tax based on your location and the seller's location, but it's up to you to remit the sales tax. These are some really complicated issues, but hopefully this will give you a place to start your research with your software, as well as some insight on if your books are correct when it comes to these issues.